Hey guys, welcome to the Com Club's very first webinar, live from the glorious Hoylake beachfront. To quickly give an overview of the Com Club, it was built a few months back during lockdown, the reason being the change of the business landscape resulting from COVID. We wanted to create a platform that allowed the younger generation in particular to build and develop their networks and knowledge, communicating with professionals within the industry with an interest in cryptos, trading, the commodity trading business, and much more. I'm your host, Harry Bennett, and to introduce my guest speaker, Joe Earlam of Earlam and Partners Limited.
Yeah, thanks a lot, Harry, and good to be here. In my 20s, I was a stockbroker dealer in London. Then I moved on as a cotton trader. I spent 18 years trading cotton out of Liverpool. For the last 13 years, I've been acting as a commodity advisor from farmer all the way through to the end user, trying to accurately predict the directional move of raw cotton each season.
Great stuff, Joe. And, thanks for coming on to the show for the first webinar. So the quote and theme for today is all boats rise with the tide, which is something you taught me a few years ago now when we first met. But perhaps you could, explain to the audience what you mean by this and go into a little bit more depth.
Well, yes, when I first started trying to advise people about cotton, I just looked specifically at cotton, but I very quickly began to realize you had to not just look at cotton, you had to look at the other soft commodities, you had to look at what's going on in stock markets, bond markets, everything really, to go and really understand. But I think the best way to probably describe it is if you go back to what happened with COVID when it first came in. Cotton in the January of 2020 was trading at 72 cents, and when COVID really took hold, it literally collapsed. It went from 72 cents down to about 48 in the space of 2.5 months. But also all the other soft commodities fell, oil collapsed, literally all the commodities quite literally fell off a cliff.
At the same time, stock markets,
February
period,
the stock market likewise, and they crashed, everything crashed, they went straight down. But really right at the height of the COVID crisis, when we were all being locked away in the UK, they made a massive turnaround, literally made a U-turn, and since that time they've all gone up together as well. So that's what I mean, they all moved together.
Okay, so when you're looking at any market, let's take the cotton market for example, what are the factors that you consider when you're studying the market? Or
well, I think there are 4 things that you have to look at when looking at any commodity market, in fact probably any market at all. But the first of those is fundamentals. That's pretty straightforward. Anybody with even the remotest knowledge of anything should know
news flow and
what's going on in your commodity. USA is the biggest exporter of cotton in the world. Brazil's the second one. What's going on in the USA? What's going on in Brazil? What's the weather doing? Reports, the weekly export report, commitment to traders report. You've got to be looking for. They're the fundamentals which are moving that underlying commodity. The second thing I like to look at is the technicals. That's the reading of charts. You've got to be able to read charts. So is it all going up? Is it all going down? You've got to go and look at the technical side of things, moving averages, areas of support, areas of resistance. They really show you a way. The third thing, and probably one of the things that can railroad fundamentals, is the money. It's what hedge funds are doing. If you're not betting with what the hedge funds are going, you're not watching what the hedge funds are doing, you're missing a trick. Yeah. There's a weekly report called the Commitment to Traders Report, comes out every Friday, 3 o'clock New York time. And it tells you the positions of funds in each of the individual commodities. So it's like having the keys to the safe, if you know what the funds are doing, you're right on it.
Fourth and final.
Yeah, fourth and final one is something that I find pretty fascinating. I like numbers. It's the statistics. When I first got involved in this, I went back 20 years on cotton, and I kind of saw patterns developing. I saw that cotton moves, for instance, this century moves about 65% intra-year on average. So then I went back 60 years and it was moving 50%. And then I went back reading books and produced spreadsheets and went back all the way back. Funnily enough, went all the way back to 1790 when the first bales of cotton were being produced in the United States.
Studying that historical data and coming up with the cyclical patterns.
Yeah, and it's really fascinating. Let's talk about commodities a little bit. I mean, cotton, as I say, moving 65% this century, and you look at the grains, you know, they move 50 to 70%. Coffee moves 75% on average, sugar 100%. They all move big way. Commodities are far more dangerous than equities, let's put it that way.
I'm glad you sort of touched on the grain markets. As you know, I write a corn report every week, and you know that market doubled, you know, since COVID broke out. But recently we've seen, you know, a setback of 28% in just under 2 months. Have you got any comments on why that might be? Or
yeah, I do actually. You've got to remember the funds went from short position to a massive long position, and it, as you say, it more than doubled. But like everything, everything's got to breathe, so it needs to come back down a bit, and that's exactly what we saw. The hedge funds, who were probably nearly record long, they got out of their positions. Not all of them; they're still substantially long, but they got out. And it's you know, everything moves cyclically, and corn is no different. And you know, corn has retraced nearly 50%, wheat has retraced exactly 50%, cotton Fibonacci 38.2%. All of them have come off a bit, and then there's another reason, I think.
So sorry, Joe, you
go ahead.
Essentially saying that the funds can railroad and almost push aside fundamentals. It doesn't matter what that picture is from a...
Yeah, so yeah, you've got, you know, so corn, it was pretty bullish. It was probably the most bullish when suddenly it started falling out of bed, and people are going, why did that happen? Well, they got out, I think, Harry, because also we saw a counter trend move in the dollar, because there's an inverse relationship between commodities and the dollar. So what actually happened was, we mentioned earlier that the dollar went from 104 down to 88, and now the dollar is having a counter trend move, trading about 92.5. So when a dollar moves up 4 or 5%, we've seen a massive fall off in commodities. They will react far more with a greater deal of volatility than, say, the dollar index will move.
So this period now is simply markets breathing and having a pause for breath, which has been helped by that counter trend move in the dollar. And as you rightly pointed out, that inverse relationship between the dollar index. For the audience at home, we just sort of put up a chart here, which I think clearly backs up Joe's point about the dollar index and that inverse relationship between cotton and its big brothers, corn, soy, and wheat.
Yeah, I mean, I think the question you've got to go and ask yourself is the dollar going to keep on going back up, in which case commodities will probably stay weak, or is this merely a dead cat bounce? And I believe that it is that, and that, you know, the dollar could go up another couple of percent, and commodities could maybe come off another 5 or 10%. But I think that will be it, because I actually think when you look at the dollar and you look at currencies are a reflection of the strength of a country, and they tend to trend for years. And we you know, literally years, 10, 20 years, you see it. And I think the dollar saw a very significant top in 2020, just as commodities saw a massive multi-year bottom. And I think this dollar bounce and a reaction down for commodities is merely a pause for breath. If that answers your question.
I guess, Joe, you're talking about longer term trends here, which, you know, we've pulled up another chart here, which I think supports your view, Joe. You know, the 25-year chart showing a downtrend for the dollar index. You agree that, you know, potentially we see that short-term bounce to 94.50, but
Yeah, I mean,
we're heading south moving forward?
It could come off straight away, Harry. I mean, another 92.50, 90 to 94.50. It will cause a bigger move for commodities for sure if it keeps on going up. But I really believe that the fundamental picture for the soft commodities looks pretty positive at the moment. So I really see that move down for corn and move up for the dollar as counter trend.
So we touched in that conversation and that question, we kind of went into what was the framework of this discussion around inflation, and we see these headline figures of 5% CPI, and I feel like that's a little bit distorted and not really accurate of what's going on in the real world and the price of commodities. When you see, the likes of these prices are up 30 to 100%. What's your view on that?
Well, it comes down to how governments calculate inflation. I think it's the man on the street who is going out to go and buy himself a meal from 18 months ago, he's now going out to the restaurants. How many people on the street today can honestly say it's costing them 5% more to go out for a meal? It isn't. It's costing you 20, 30% more. It's in government's interest to keep that figure down, and they try to pretend that inflation is what it is. But we know that commodities is real. I mean, without commodities, we can't survive. We drive to work, we have our Weetabix, we put sugar on. I think that everything we know in our commodity industry, that all those commodities are 30 to 100, even more than 100% higher. But it doesn't feed into it just yet. It's kind of a laggard, but it will do eventually. So
you could almost say they preempt what's going on.
And it then makes you go and say to yourself, well, why the funds? They were short of commodities when they all bottomed. Now they're all long and they're staying long. They're not as long as they were. But hedge funds are supposed to be the wise money, and the hedge funds are long commodities and they want to stay long with commodities, and it will eventually feed through into higher prices for all of us. And the man on the street is seeing that today through the higher cost of living.
Yeah, I mean, to revalidate your point there, I think you only have to look at the price of crude oil gone from $7.42 a barrel to well over $72 a barrel now, which sort of goes into my next point about what's its impact on moving goods around the world. And
yeah, good question, Harry. You've got the Baltic Dry Index up there. The Baltic Dry Index is an indicator for how for what it costs to move goods around the world, and
often an economic indicator of.
Yeah, exactly. As in, costs a lot more. What we've seen in our own industry is freight increases. Well, first of all, we've got congestion in the world. We've got transshipment ports completely bunged up. We are seeing the cost of moving goods to Bangladesh from 30 to 100% more expensive than they were a year ago. And people need to pass on those costs, and they are passing on those costs. Very difficult time for merchants who sold goods in advance and suddenly find they're having to pay twice as much for their freight rate to go and get it there. And that means higher prices because someone's going to pay for it. And that means prices are very unlikely to go down. And we also don't see this congestion issue changing for at least like another 6 months at the very earliest. So first quarter 2022, maybe things start to return to normal a bit in terms of freight rates, but right now it's carnage out there. Not good news.
Which, all leads to one thing, doesn't it? Inflation is alive and kicking, and the price, as you say, the real inflation figures of the man on the street, it's going to filter down and prices are going to go up in the supermarkets. And
well, I think we're seeing it already, aren't we?
We are. I agree with you 100%. Well, I think that's a really good sort of space for us to, come to a close of the discussion. And I think there was some really great points raised. And just to summarize for the audience at home, I think what we can take away from that is, asset classes like commodities, they don't move in isolation, they move as a collective. So as an asset class, things go and all boats rise with the tide, as you rightly said. I think it's important to note the technicals, the fundamentals, the statistics, the money flow. But let's keep a focus on the money flow, as you know, that can really railroad the fundamentals, as you say. But yeah, great stuff. Well, I think, Joe, if you don't mind, we've got a few questions that have come in from the audience at home. If you don't mind answering those for us before you...
Far away, mate.
So we've got the much talked about crypto markets, and what's your views on cryptos and that space?
It's not something, you know, I'm getting to be an old man these days. So in my day, we were sort of punting tech stocks and I think the young today are sort of talk nothing but crypto this, crypto the other. Anybody that bought cryptos 3 months ago is nursing some pretty hefty losses today. There's something like 7,000 cryptos in the world. The crypto 10 index, which is the 10 biggest cryptocurrencies, obviously led by Bitcoin, they have been walloped in the last 3 months. They're probably
nursing some heavy losses.
It's something I try to stay away from, but I actually think there'll be some very successful cryptocurrencies. You know, some of the better known ones, Bitcoin, obviously, Ethereum, XRP. I think there's some very, very interesting companies. I think, and they will probably survive very, very well. A bit like, you know, back in the day when my crypto time, which was the .com boom, you know, you had things like Apple, Google, Amazon, and look at the size of these companies today. So I think there will be some very successful crypto companies, but there's 7,000 or so out there. They've dumped, I think it was 3.5 about a year ago. I keep an eye on them. I don't pretend to know a great deal about them. They are here to stay, but understand one thing, cryptos, you know, I'll take a good way of explaining it probably is cable, which is the dollar, US dollar against sterling, moves on average about 0.75% per day. If you compare Bitcoin against the US dollar, it moves 7.5% per day. If you take XRP, Ethereum, they move 10 to 15% a day. So they're highly volatile. So those poor people that have got hyped into buying cryptos 2 or 3 months ago are nursing 50% losses today. You don't see 50% moves in sterling.
So you would say remove the volatility and stick to something that's more.
That's what I do. But I'm not 20 years old, and there are crypto whales out there who have made millions. But I think the people involved in cryptos recently will not probably want to. They're probably lost half or not all their money. It's not something I'm involved in desperately, but it's, you know, commodities is my thing.
So favorite trades at the moment, you've got your eye on, you're friendly to the grains, you're friendly to cotton?
Yeah, I do like cotton here. I think cotton is a really good buy, probably from 86 to 80 cents basis a debt contract. I really like wheat. Wheat has retraced 50% from its high to low. You know, there's 80 million more people on the planet every year. We need to feed them. I think the hedge funds know that commodities is an inflation hedge. It's well documented. So I kind of like the cotton. I quite like cotton down here. It's probably a relatively brave thing to say when we've not been above 96 cents in the last 9 years, but I like cotton, I like corn, I like wheat, I like soy a bit, probably more corn and wheat really. But yeah, that's the sector that I'm involved in, and it's that's the trade I would like. Yeah,
certainly the fundamentals all point to corn and soy heading much higher, and obviously, as we've just pointed out during the conversation, that we do see things moving higher in the future.
That's right.
Okay, so the third question, and this was probably my favorite one actually, Joe, was what would your one pearl of wisdom be for those looking to enter the ag space, younger generation in particular?
Good question. I think I would, if I was a young man and had my chances again, I'd probably do what I did, which is to go travel. I would get out and get your hands dirty. Go to work on a farm in Australia. Go and see what a farmer has to do. Which crop is he going to plant? What's he going to do when he has a hurricane go whizzing through his farm in Iowa or something like that? And how does he cope with it? Try and understand what they do. Go to Brazil, go and learn Portuguese, go and live out there for 2 years and go and see what these people have to cope with as a farmer. Then come back and do the learning of the futures and the options. That's, if you want to get into that, you get your hands dirty, go and find out what it's really like. You're not going to learn this stuff sitting at a desk. You've got to get in and amongst it. And that's exactly what I did. Travel, understand moving containers, understand the problems involved. That's how I get involved in it.
Great stuff. And the fourth one's an idea of mine, which something that you, when we first met a long time ago, was you gave me one big book, which was by W.D. Gann, and it was How to Profit from Commodities. And
How to Profit Trading Commodities, yeah.
Fantastic book, and reinforce everything you've said today about statistics and history being your guide, and you know that everything has a cyclical nature and history does repeat itself. But have you got any other recommendations for the audience listening in? Any books, any suggestions?
Well, I think I probably, W.D. Gann, you've mentioned, he was an absolute legend, sadly now dead. He'd probably be about 120 now if he was still alive, but he was an absolute legend. He died, I think, in the late 50s before computers were really working in any great way. But he was one of the first people to identify patterns in commodities, and he was a legend for forecasting and identifying seasonal patterns. He wrote a good book called Tunnel Through the Air, which I would recommend people reading, but probably my favorite one is a story about a guy called Jesse Livermore, who was a very, very famous trader in the 1920s, made and lost many fortunes. I think his story is as relevant 100 years on as it was back then. Written by, I think, Edwin Lefebvre, I think his name is, and it tells his story about how he made money. And that would probably be one of my favorite books to go and read. And as a trader, you learn from other people's experiences. Nobody's going to tell me that a trader has not a good trade. Losing money is part of the game. If you don't lose money, you don't learn. You know, I've lost a fair bit in my time and had some good days as well, but no trader's going to make a success of himself unless he learns how to lose.
Great. Well, I really appreciate your time today, Joe, and I think that's a good position for us to sort of finish this discussion. And I just want to say thanks for those listening in. Feel free to like, comment, and share on social media. Subscribers on the website will get access to the slideshow today. We more than welcome anyone to join the club, and hopefully we can get things moving. And you know, joining the club comes with a multitude of benefits, not only access to these monthly webinars, but the networking, which is the key to building relationships and keeping yourself connected within this space.